Making tax digital will start rolling out for landlords in 2026. Yes, I know it's already been delayed, but this time it's really coming. So, if you're a landlord and if your income from your buy to lets and any self employed income as a sole trader is over 20,000 a year, you need to know what's coming and what it means for you. Who am I? I'm Suzanne Smith, lawyer turned landlord, and I run the Independent Landlord website and this YouTube channel to bring landlords and property businesses reliable information. And today I'm doing an explainer on what landlords need to know about making tax digital. And I'll be sharing my own experiences of using MTD software, and you can get a special discount from the company I use as well. And stick around to the end as I'm going to share some practical tips to help make the transition as smooth as possible for you. And to find out more on this topic, check out my blog post at theindependentlandlord.com/MTD. And you can sign up for my free weekly newsletter at theindependentlandlord.com/subscribe. Right. Well, what is making tax digital for landlords? Well, it's a government digitisation program that's been a long time coming that will make it compulsory for sole trader landlords. That means that you own the property in your own name and not through a limited company. And sole trader landlords will need to keep digital records of transactions, so it's the rent and expenses, and send quarterly digital updates to HMRC once their income from their rental properties and self employment reaches certain levels. And if you're in scope as a landlord, you'll need to send a final declaration that includes other income tax by the 31st of January each year, in the same way that you have to do your self assessment now. But this is going to be digital and online. And so this means that instead of using the HMRC website to file self assessment returns, landlords whose qualifying income is over the threshold will need to submit quarterly digital updates to HMRC within a month of each quarter end date using authorized MTD software. So, why is the government doing this? Well, the idea behind MTD is making the self employed and landlords keep digital records and to submit quarterly updates to HMRC with compatible software. And the idea is that this will reduce errors and make it more difficult to underreport income because the software links up to the to bank accounts, and it's a lot harder to make mistakes and to underreport. And as part of this, they're wanting to reduce what's called the tax gap. And that's the difference between the amount of tax that should, in theory, be paid to HMRC and the amount that is actually paid. And so this is lost revenue to HMRC, which the government has estimated was £40 billion in the 2022 to 2023 tax year. And of this 40 billion, they estimate that 60% of the tax gap is from self-assessment business taxpayers, and that includes landlords. So when is it all going to happen? Making tax digital for landlords is being done in phases, and they're going to do this for sole trader landlords depending on how much gross income they have. That's, the top line before you take off any of the expenses that these landlords receive from rental properties and self-employment. So this is calculated on an individual basis. So if you own a property jointly with someone else and say you own 50% of it, then you just count 50% of the rent in a year for that. An accountant has explained to me that this is based on the total of certain boxes on the tax returns, and those boxes are the gross turnover from self-employment and the rental income, total income boxes. So other income doesn't count towards the threshold. So you can exclude any income from employment that goes through PAYE or a pension. Now for the dates on when making tax digital will become compulsory for landlords according to their total turnover and rental income from self-employment and sole trader rental properties. So I'm going to call this the qualifying gross income for short. So, if your qualifying gross income was more than £50,000 in the 2024 to 2025 tax year, then you'll need to start making your Making Tax Digital filings from the 6th of April 2026. And if your qualifying gross income in the 2025 to 2026 tax year is over 30,000, then you'll need to start Making Tax Digital from the 6th of April 2027. And if you're like most landlords with a qualifying gross income of over 20,000, you'll be in scope from the 6th of April 2028. And there'll be penalties, inevitably, if you don't switch to Making Tax Digital by the right deadline for you. So, what MTD compatible software is available for landlords at the moment? I started looking into this myself as I'm in the first wave of landlords who need to do this from 6th of April 2026. And you can check out the latest list of all the software on the HMRC website. There's a link in the description and in my blog post. So, what MTD options are there for landlords at the moment as I'm recording this at the beginning of April 2025? The first one is full-blown accounting software for small businesses like QuickBooks, which is what I use for my consultancy business, Xero and Sage. And they might be a good option if you're already familiar with it. Say you're a self-employed sole trader, although you'll need to customize it and separate it out from your self-employed business. And the other key option to use is software that has been developed specifically for landlords. And the only landlord accounting software that has been approved by HMRC for Making Tax Digital, as I'm recording this, so that means you can use it for all of the 2025 to 2026 tax year, is Hammock. And that's the one that I'm using. I've decided that instead of customizing QuickBooks, which I already have separate bank accounts for my rental business and from my consulting business. So I just decided it's easier to keep them completely separate. And the thing about Hammock is it's really easy to use. It's all set up for landlords already. There's not so much customization. I started using it only a couple of days ago and I've managed to set it up. It was that easy. I haven't even had my onboarding call with them yet. That's this afternoon. What I like about it is that a lot of the hard work's already been done. You can easily add properties and tenants, and the categories of expenses are there. And even the EPC's already been uploaded. And the good news is, because I've been so happy about it, I contacted them and they've offered to give landlords a discount, a 2 month free trial if you use my affiliate link, theindependentlandlord.com/hammock. And that URL, if you click on that, you'll be able to sign up for a 2 month free trial. You'll need to add your payment details to get the full functionality, but you'll be able to cancel it without paying anything before the end of the 2 months, and they'll send a reminder to you as well. So go and give it a try and see how you get on with it. And the third option is bridging software that will enable you to keep on using spreadsheets and still manage to upload it onto HMRC without meaning you have to completely change your existing methods. And that might make sense for landlords who just have one or two properties. Finally, what can you do to prepare? Well, I'll now share some really practical tips to help make the transition as smooth as possible for you. Well, first of all, figure out if you're in scope for that first April 2026 wave, because you need to get your skates on, or at least you will need to. And you can do that by calculating whether you had qualifying income of over 50,000 in the 2024 to 2025 tax year. And if so, you'll need to be ready for the 6th of April 2026. And there's a link in my blog post where you can go onto the government website and put in your various income, and they'll tell you whether or not you'll be in that first wave. And if you're in that first wave, you'll need to speak to your accountant about this and ask what they recommend. And as I said, I'm using Hammock for my own portfolio, and I know that many accountants do use it, but check with your accountant to see what's right for you. If you've only got 1 or 2 properties, you might use bridging software, but if you have multiple properties, it does make sense to use Making Tax Digital software, as it's gonna be a lot easier for you once you get over that initial learning phase. So secondly, whatever category you're in, digitize your records. If you're currently using paper records, start transitioning to digital record keeping, and that will make it really easy for you. And so scan all copies of receipts. I mean, tradespeople tend to send me invoices by email now anyway, mostly because they're already using software like Xero and QuickBooks. I can't remember the last time I had an old-fashioned paper invoice. But the sooner that you start saving everything electronically, the better. And if you use letting agents who collect rent and incur expenses on your behalf, ask them how they'll be supporting you with Making Tax Digital and how they're going to provide you with digital receipts. Because when you get a digital receipt, it's just really easy to put it into the software and then you can reconcile it against the bank statements that are in the software. Which brings me to bank account. If you don't already have a separate bank account for your rental business, set one up now and use it exclusively for receiving rent and paying expenses. And because that's going to make integrating the bank account with your Making Tax Digital software a lot easier, because you're not going to have to keep going through it and excluding personal expenses. It'll make it a lot quicker. And you should do it anyway, because is a business is something that we need to keep tabs on. And if you have a separate bank account, it's a lot easier. I know that this seems like it's yet another thing for landlords to do, but having gone through it this week, I don't think it's all bad. I'm seeing myself that tracking income and expenses electronically will actually save me a lot of time in the long run once I've set it up. And it will make preparing accounts at the end of the tax year a doddle. Well, maybe not quite a doddle, but it will make it a lot easier. And it's so much easier to keep tabs on rent coming in and the profitability of each property and your portfolio. And with Hammock, they have a really neat thing that you can put the current value in and it'll tell you what the yield is. So you're using the yield properly and not an out of date yield using what the price that you bought it for. And Hammock even give you the option of one subscription for properties that you hold in your own name, jointly with someone else, and in a limited company. So you don't need different subscriptions for that. And so I was really surprised how easy it was to set up. And sure, I'm good at tech. After all, I do my own editing for YouTube and my website, etc. But I'm proof that someone in their late 50s can easily cope with it all. So watch out for my review of Hammock. I'll do an in-depth one and I'll link it to here once it's done, so to make it easy for you to find. And I do a lot of other content for landlords. You can keep up to date by subscribing to my free weekly newsletter on theindependentlandlord.com/subscribe. And if you got this far, please give the video a thumbs up. It really helps. See you soon.